Well, I learned to be absolutely defensive in these markets. Conserving capital is like the most important thing, um, especially when it comes to inefficiencies. When ICT was talking about inversion for value gaps, watching how the candles on the 1 minute chart would react, um, keeping the inefficiency on the chart as well as, at one point in the stream he spoke about having a balanced price range, so the price action would kind of like, you know uh, print one side, and then in terms of the buy side, if you want, and then the sell side. And then he said, okay, well, you keep that inefficiency on the chart, and then he's kind of creating a narrative or trying to, gauge whether price is going to respect the inefficiency at a later point in time in order to understand where, price could gravitate to in the future. I just found it extremely funny, and it was probably a coincidence or not that a minute after the stream was cut off, that the Nasdaq decided to just go on a wild run.
That's Phil. That's Phil. If you watched it when I was doing it live, right at the 6 minute after 11, when that candlestick did that false run and didn't take the macro time, I told you that's Phil. That's manual intervention. And they pulled it all the way back. And then once I walk away, then they'll let it go. That's the reason why I'm not going to paint you guys into signals, because there's so many people following me. And it's just basically, it's a free for all. It's an easy, like shooting fish in a barrel. So what I do is I post levels. You all know what I'm looking for because of how I teach it. So when I call out specific price levels, you all can watch that happen, and there isn't any engagement where they can target. It's just going to do it. So my point is this: if the fair value gaps that I outlined on the chart are still on your chart, if you were painting them on yours, as I did mine, you can see what they did with it. You can see they used it. You can see the information was still important. They didn't take it back to first presented fair value gap. It's fallen short of that. But we used that gap at, make sure I got the right time here, 55 minutes after 9. So that SIBI, which we were looking for as an inversion fair value gap, once they pulled it back and failure to launch was at that 11:06 1 minute candle, it didn't take out the highs formed at 10:18. Once they pulled it back enough into an area where I wouldn't have been participating in it, I would have been done. And then real quick, sudden, in 1 minute candle, they traversed all the way up to where I told you it was going to go. That is manual intervention. That is not algorithmic. That's them watching. That's them participating in our conversations. You can choose to believe whatever the fuck you want to believe, but that's exactly what's going on all the time. That's exactly why I would never do a signal service. They would wreck it immediately, because so many people will be following it, and the people that would be in it, they would be selling the signals as their own. And it'd be so many eyes on those levels, it would build the liquidity that would be easy for them to go there and just take it right off the vine. So you have to find your own way in this stuff. You have to put the work in figuring out how you're going to engage in it. There's lots of setups that happen today, but they're not the full range, run higher and lower. It's just simply, what are you going to take off the vine? And are you going to be content with that in the beginning and grow gradually over time? If I put everybody out there that's willing to listen to me into the market, and all of us have the same liquidity, the biggest stop loss is going to be formed based on what I'm saying. Here's where my stop loss is going to be. Where are you going to put your stop loss? Right there. And where's the other 500,000 people that's going to share it because it's been passed down through social media? It's going to make that big bubble on Bookmap. it's going to build up right there. That's like easy shooting fish in a barrel. That's what people that don't know how to trade or brand new to trading don't realize. I'm not going to build these pools of liquidity where they can just knock them off. I'm not going to do that. So you have to operate in your own shadows and just do your own work, find the setups that fit you. But what I really want to hear today is, for the folks that were watching, the structured approach to anticipating a failure to continuously move lower, like when I was outlining it during the 38 minute after 10, where we were flirting with going below that low that was formed at 10 a.m. I said it might just go just below that. And I was kind of like describing this analogy of a little dog on a big porch. And it jumped off the porch and it went right back into the range. That's problematic. That's problematic. Did it not pan out like that? Forget all the other stuff because it's neither here nor there. The logic in which I was trying to encapsulate is seeing setups, seeing PD arrays. There was a fair value gap there. It could have went below that low, but I was telling you I would not be willing to do those types of things because this is what I suspect may be there because of the time at which we spent inside of that 38 minute after 10, 1 minute candlestick, which is a fair value gap. It spent so much time in there. What it was doing was it was painting a bear flag. And those continuation patterns in this type of setup, that's a false flag. That's what's in my mentorship. Go in the 2016, 2017 mentorship. And I talk about these things, false bull flags and false bear flags, how to know when they look, what they look like and where they're forming, how do they form, what's the basis on what they're doing when they're doing it. And that way you don't get caught up in this so easy to follow me trading setup. Okay, it's a fallacy. And if you don't have criteria in which you define when it's not likely for you to be successful, even though you see a trade that has some similarities to certain things, it may be a PD array right there. There may be a sell side liquidity pool in close proximity. It might have all those things there, but it doesn't equate to this is a high probability short that's going to continue going lower. That's what I was trying to hone in on today. I was trying to use the time I was over the live price action, teaching that very element. And I'm hoping that at least it was communicated. And if I didn't do a good enough job, then say so. That's fine. But that's what I was aiming for.
I have some notes that I took about it. I can try to articulate them to see if they're correct. They are my initial notes, so it's possible that I have mistakes before I revisit. But what I wrote down there was that you said something about if we take that low by one tick, you want to know if it's gonna go melt lower, and if it does that, it should not go back into the range if it's really bearish. So if it stuck his head outside of the low, and then you did the puppy porch barking analogy, like when it went below it. No, you said if it goes below it and it then jumps back, then it's like a puppy that goes outside the porch barking to a bigger dog, and when the bigger dog barks back, it goes back onto the porch. And when it did that, shortly after, it went below the low and it went up. And then you said, see, right there, it went there, the puppy went out and it went back into the range. And that's something that you wouldn't want to see if we were really bearish. And then you also said that lower gap there were several gaps. The lower one, you said the candles are overlapping a lot, so it's also high resistance liquidity run. You don't want to see that. It's spending a lot of time in there. And I remember from earlier lectures that you have said candles are overlapping 70% or more with the previous candle. That's high resistance liquidity run, and you don't want to see that spending that much time.
Very good, very good. Isn't it interesting that while the live stream was going on, I know I had at least 3,000 the last time I looked at, but I don't know what the time, or not the time, but the number of people watching it live was as I said it. But at that very low of the day, as it formed, I was outlining what I did not want to see if it was going to drop below it. The problems were it may just go below by a little bit and go back into the range. And that's what I was anticipating. That's what I was suggesting as the stage for them to have done that very thing. As it happened, I said, that right there, that's what I'm talking about. That's not what we want to see.
Yes.
That candlestick and the very candlestick where I told you that they enter with manual intervention at 6 minutes after 11, you don't see that in classic support and resistance or any kind of retail trading. Nobody in volume profile is going to be able to tell you that shit. No one's going to be able to tell you anything at all like that. Because I'm looking at well. Yeah. It's like we are looking at things that are not synonymous with other things. And because it's not synonymous and it's not something that you can be indoctrinated by watching books and reading books and listening to other people using it elsewhere before I was even born, it's going to take a little bit of effort to learn this stuff. And what I was showcasing today, this is hard lecture stuff. This is not easy stuff. So if you looked at this and you struggle and you're like, man, if I got to do this to be successful, I'm not sure I want to do it. This is what real trading is going to be encountering. In your own hands, you're going to have this problem. You're going to have these things occur. And if you don't have protocols and being able to see, this is what it could do. These are just like we have a model and a framework for a setup that we want to trade on. What invalidates that model? How much time are you spending on that? Because chances are you probably aren't, because you only want to look for the win. Get me into a trade that makes me money. Give me a position that I can put a very, very small stop loss on that I ain't got to babysit, and it'll let me stay in the trade the whole way, and I'll make my maximum. I won't even worry about doing partials because I just want all of it. I want all my money. Nobody really teaches us in anything. I have lots of books, and I still see all these people coming up as new mentors, new teachers and stuff. And I'm not saying my stuff, other things too. Nobody talks about how to break your model. You have to think like a market maker, not a dealer. People that call themselves market makers, they're not a market maker. They're a dealer. A real market maker is what you watch me call, as it happened, real time. I can see when they're doing it. I can see when it happens, why it happens. And I'm telling you exactly at the very moment it happens, live streamed. That is not cherry picked bullshit. That is absolute visibility. But if you don't go in with the idea, it's okay, how can I get wrecked with this model? If I stick with this model, how could it be victimized? When would it fail? What signatures would indicate to me that I am no longer looking at a model that's going to pan out? How much time are you spending doing that? I guarantee you none of you are really doing that, but you have to do those things. And that's how you back test. It's not just simply, this is my best case scenario where I kind of get in and get perfect entry, perfect stop loss, perfect everything, where you had no risk, you had no uncertainty the way out and wrestle through. You got to go back in those old moves and say, okay, everything in this price run here, what would have been a warning sign for me? And be honest. Tell yourself, this probably would have scared me. And I either would have collapsed the trade, or I would have took something off, or I would have been stopped out because I choked it too much with the stop loss. You have to do work like this, because unless you condition yourself this way, you will not be able to work in these environments like this, and you'll just constantly blow the account. The fatigue of you not feeling comfortable will force you to subconsciously blow the fucking account. That's exactly what's going on. Look around. There's so many people, they're just bent out of shape because the markets are hard. And you know what that does? By you blowing the account, it gives you something to cause a feeling of release. It's almost like orgasmic. Not to be crude, but it's almost orgasmic. It's a release of tension. And that's exactly what you're suffering. You don't realize it, but that's what you're doing. You can't wrestle with what we're dealing with in the price action. So you just want to have some kind of escape, some mechanism to remind you that you can be taken out of this and you'll still be alive. You'll be miserable because you lost the account, but it's a reminder that I can restart. It's hope, because you're losing hope right now because you're pushing too hard in market environments that are absolutely fucking challenging. They're challenging. I'm telling you they're challenging, but they're not impossible. They're not impossible. And you have to go back to, okay, what's possible in my current understanding? And don't go outside that boundary right now, because you're not going to get a true evaluation of what your baseline is. Everything is difficult right now. So by putting so much emphasis or significance on your right now results and saying this is all you're ever going to be able to do, that's not a true perspective. It's not true. It's true right now, and we all have to acknowledge that. But that's not the reality that is on a normal basis. These are wartime events. That's not normal. We don't always have war. And this could stretch out for years. Or it could be ended in short fashion. Nobody knows that. I don't know that. You don't know that. Nobody knows that shit. But by pressing yourself into this expectation that you need to be doing better than you are right now because you just hold that opinion, that's not realistic. That's not realistic. So what I'm doing and what I taught today was you have to pull back what you're willing to take as a target and be content with that. Don't trade a lot. Demand a whole lot more in your favor for the setup. And do more work in your back testing, seeing what was making this price run so challenging before it ran. And spend a lot of time on those types of examples, because you're going to benefit more from this type of training, trading in these hard markets like this. When this stuff loosens up, it's going to feel like something's clicked in your head and now you're a superstar, because you will be trading when markets are allowed to run.